Get Rich Slow with John Wolf. Hey, today I'm going to talk to you about the FHA loan because for a lot of people, that's the fastest way that's possible to build wealth in America other than with your income. I'm a loan officer in Oregon and Washington, so hit me up if you need a home loan or refinance. Also, smash that like button. Okay, so let's talk about FHA loans. So it's really for people who have lower credit score, less money down, have had a bankruptcy even just 2 years ago, 1 year in certain circumstances, people who may have even had a foreclosure in the last 4 years. They can all do FHA loans. And the minimum credit score for this program is 550. Now, I'll be honest, it's difficult to get one of these loans done if the score is below 620, but it's not impossible by any means. And most people only put 3.5% down. Now, most people might assume that the maximum loan amount for this program is really low, and that's actually not true. You can buy nearly $1 million house with just that 3.5%. And that is mind-blowing to me. But whether this is your first home just to live at, and so you want to, lock in your personal rent payment forever, have that mortgage payment that doesn't increase, or if you want to buy a fourplex. And buying a fourplex with FHA is the best deal to accumulate wealth that pretty much any of us have on offer, unless you're a veteran. And if you're a veteran, you can do that game twice, which is super cool. But anyways, on the FHA loan, so here's the basics. You need that credit score, 620 to make it easy. You need to have 3.5% down unless you live in Washington or are going to buy a home in Washington, because in the Portland metro area, the state of Washington has a phenomenal zero down program I can help you with. But if you want to do a fourplex, you definitely need 3.5% down. And here's the really cool thing. People talk about mortgage insurance, and FHA has a built-in mortgage insurance you pay up front that they roll into the loan. And then also it has a monthly mortgage insurance. Now, the cool thing about its monthly mortgage insurance is that it actually goes down every year. You have to pay 0.85% of the mortgage insurance rate every year based on the current principal balance at the start of each one of those years. It goes down over time. It doesn't ever just disappear off to zero like a conventional does, but it's going down. And if you're going to weigh buying a fourplex for 25% down as a conventional and buy a fourplex as FHA 3.5% down, the use of your money, it's probably way better to that FHA. And there's a couple things in there. Now, 25% down conventional, you're actually going to have a higher interest rate compared to the FHA, but the FHA is going to have that mortgage insurance, that 0.85%. Now, because the way FHA calculates their mortgage insurance, unlike the way conventionals do it, you can sort of just add that 0.85 to the interest rate you see on the FHA loan, and you can almost compare that apples to apples with the same interest rate number on a conventional where there isn't mortgage insurance because you put 20% down, but you only had to put 3.5% down. So when I did my loan back when interest rates were a bunch higher in September of 2019, I was able to get a FHA loan more than $700,000 at 3.25% interest with just 3.5% down. If I was buying that same thing with 25% down, I probably would have been looking at a conventional of like 3.94%. But obviously there's a ton more money still in my pocket, which is going to make it possible for me to buy more properties this year. And that's what I'm really looking forward to. But anyway, some details you need to know, because there are some things you have to be careful with when you're trying to put in your offer for an FHA fourplex. And that is one of the basic rules that they put on top of you. And I would say if you can't get a fourplex to do this math, it's maybe not a great deal, at least not on the income side. And that is the full mortgage payment for the FHA loan has to be paid in full dollar for dollar by the 3 units you're not living in, or their estimated rent after you're able to switch out the tenants when the old tenant leaves, if the rent is lower than it should be by the market. But just, I have another video where I actually go through the math of my own fourplex purchase, which I totally suggest you watch, because it's really amazing, because you see it, this transaction with just 3.5% down basically be a real loss of about $1,000 a month / break even the first year. And then the second year, it's about a profit of $500 a month. And then it kind of goes up to a profit of $1,500 a month. But that whole time, the mortgage is getting paid down. So that lets you build wealth at the biggest single package possible of really anything that we can do as, beginner get rich slow people. Going back to looking at it as a single family residence, it is just a great opportunity if you don't qualify or have the cash to make a conventional work. One of the things that I've just seen continue into the future, and I know that there's a little bit of economic instability right now, but home prices are actually going up really fast. I think a lot of people are afraid to have their homes on the market, but there's still almost as many buyers out there. So they're actually bidding home prices higher right now. And I don't see an end to that. For home prices in the US to really start to go down, either the future lending terms have to get considerably worse over time, or the population growth of America has to stop concentrating into the cities. And I just really don't think that those things are super likely. Now, there can, of course, be, some specific area of the country or city where things get unpopular and people move out of that area. And so home prices collapse. But nationally, that is not the trend at all. So what I tell most people, what I believe in myself, is as soon as you can buy a home on decent terms, you want to jump onto that escalator, because that home price is going up faster than your ability to afford more home for just about everyone. And the home purchase with the great financing, with just the way that you're going to pay off that big debt over time and how the home is going to be worth more over time, that is the best, most reachable, fastest way for the average American to really build long-term, even generational wealth. Let me know if you have any questions or comments. Smash that like button. And again, I'm a loan officer in Oregon and Washington. So if you want my help getting your dreams made, give me a call. I'd love to chat. Have an awesome day. Bye.